What is going on, traders? This is going to be a pretty short video. I'm simply going to go over the SPY, triple Qs, and what institutions are doing for the rest of this trading week. Before we start, like, subscribe, comment your thoughts below. Let's get into the video. So right now, we're looking at the SPY daily time frame, and not much really happened today. I mean, we went up, we went down, we went up again, we went back down, but your key level here is 538, which we ended up closing below after hours, right? We're currently below 538 after hours, so it's going to be very interesting to see how this plays out. Now, what's also important to note here is that you did form, I guess you can argue this is a hammer pattern or a hangman pattern. Me, I'm going to lean more so of a hammer pattern. So this is a bearish sign, and we could see a move back towards the downside. As long as you stay below 538 on the SPY, you could be looking at a move towards 527, right? So if we go to the 2-hour time frame, you guys know that I base my entry points off the 2-hour time frame. What we want to see is a break and retest. We already got the retest, so we broke here, we retested, we went a little bit above it, and I'm assuming we stopped a lot of people out of their positions or a lot of bears out of their positions, and now we're heading back towards the downside. It's also important to note as well that there's a lot of bearish wicks up here, so bears are very, very strong at around the 545 level, and so we could see a move much lower, and we could be looking at a move towards between 530 and 527. So that's something you want to pay attention to. The VIX, when we look at the VIX, if we go to the 4-hour time frame, there's an inverted hammer pattern. If you need an idea on what that pattern looks like, I encourage you to look it up. Don't take my word for it, but this is the example of how an inverted hammer pattern will look. So when we're looking at the VIX moves inverse of the market, or I should say the market moves inverse of the VIX. You do have a nice, very clean inverted hammer pattern right here, so you could see a move back towards the upside, and my best guess is a gap fill at around 37.5. You're also sitting on top of support at around 29.5, so that's something you want to pay attention to heading into the rest of this week. Now, when we look at quant data, this is crazy, because I alerted Discord members, or at least I let Discord members know that these are some massive orders that came in for the SPY. I mean, May 30th, these came in at around 12 Eastern time, right? 12 Eastern time today, and the expiration is May 30th. They were loaded on puts. The strike is 525, and they were loaded at 536.76, 537, basically between 537 and 536. You see the quantity is crazy: 5,000, 5,000, 4,835. They were at the ask, and as you guys can see, the premiums are insane. 7 million premium, 7 million premium, 7 million premium. The sentiment is bearish. I can't say for sure if I ever seen this before, at least on the consolidated order flow tab. I haven't seen orders this massive before, especially back-to-back orders. And so one of you asked me, I believe it was either in the Discord or on YouTube, what do I look for specifically on quant data? Any orders that's over 5,000, or any orders that add up to 5,000. So let's say, you know, each one of these was like 2,000 in quantity, then I would definitely be looking to take these, right? And then I'm also looking for the ask, because obviously if something is at the ask, then it's a sign that they're more likely to buy this position, or they're more likely in this position, I should say. And then any premium that's over 1 million is fine with me. I'm not really interested in anything under 500K, so that's what I will be looking at. So these definitely fit the guidelines on what I'm looking at as far as quant data, or what I'm interested in as far as quant data. So really, really interesting. I would say be careful heading into the rest of this week. Historically, short weeks are bullish, but this is scary. All right, this is scary. And so if we exit this around close, or at least 5 minutes after close, more puts were loaded up on the SPY here. 513 strike, May 16th expiration, and then you see they were loaded at 538.08. So they're somewhat in profit right now if we're counting after hours, but yes, you can trade after hours. You can trade 15 minutes after close. So if you ever try to, you know, get into a trade or a SPY trade after close, you can do it within 15 minutes before or after the bell, I should say. The premium is 3 million. They were at the ask, so it's going to be very interesting to see how these play out. IWM puts were also loaded after close, so at around 4:03 Eastern time. Right here, you see that IWM puts were loaded, and they were loaded at the 177 strike. It's probably not going to load, but regardless, they were loaded at the 177 strike, and then I believe the expiration was, if I remember, May 16th. But yeah, very, very interesting. If we look at triple Qs, your key levels here on the triple Qs is 447. Obviously, you're looking at 447. As long as you stay below 4 460, you're looking at a move towards 477. You filled this gap fill right here at around 465, and then you just almost immediately rejected from there. So you have a lot of space and opportunity in this range for the triple Q, so you can easily just continue to trade in this range. But ultimately, if this plays out, like if these puts play, here's the IWM puts, but if those SPY puts play out, you're looking at some pretty major downside. Let's go back to the SPY real quick. So there is a fair value gap all the way at around 522. Let me see if I can find it. So right here, there's a fair value gap at around 522 on the SPY. I wouldn't so much count on that move. I would just count on a move towards 527. Again, as long as you stay below 538, you're looking at a move towards 527. And then I would just look to take profit from there. A few of you in my last video said I have a bias towards the downside. I mean, we have death crosses everywhere. Like, what are you talking about? Like, triple Qs is forming a death cross. SPY is forming a death cross. Semiconductors have already formed a death cross. Tesla forming a death cross. Apple, death cross already. Meta, probably, I don't know, I haven't checked Meta. Meta, no death cross. But regardless, I mean, a lot of these names have death crosses, so I don't understand how I have a bias when the market is literally showing us that it's ready to just crash and burn, right? Maybe you guys aren't experienced with death crosses, but it's not a good thing, all right? Death crosses are not a bullish thing. So you can say I'm biased all I want, but the proof is here, right? The proof is in the pudding right here. I mean, even here, last time you had a death cross on the SPY right here, you went towards previous highs, right? So right here you went towards previous highs, and then you broke completely down, right? So I mean, you're seeing these death crosses everywhere. So you can say I have a bias all you want, but historically death crosses are not good for the overall market, and you're seeing them form all over the place. That doesn't mean we can't head higher, but ultimately, if this continues to play out and these death crosses continue to play out, yes, you're more than likely going to see more downside. Another thing, a lot of you were saying, well, in the last video, a lot of you were saying that what happened to all the other dips? Why didn't I talk about the other dips? The other dips, some of you are like really, kind of special when it comes to comprehension. Okay, so this is why I repeat things. Someone complained that I always repeat stuff and it's annoying, but this is why I can repeat things. When you're making a low, okay, a new low, all right, so all these dips that you're talking about prior does not matter, because they're not creating any lows. Let's go to the weekly time frame, because that's what I was talking about. Because one, they're not creating any new lows, right? So this is a new low. Okay, this is a new low for the year of 2022. You made a new low here, right? You made another low here. That is what I'm talking about. I'm not talking about these random dips across the market that is completely irrelevant to the downside. I'm talking about moves to the downside that create actual lows below the 50, the weekly 50 SMA. All right, that is what I was focused on. It's not me ignoring all of this, because why would I care about this? This is not creating a new low. This is not creating a new low. It's creating a higher low. Like, we got to pay attention here. Lock in, please. Like, this is why I repeat stuff. Okay, this is exactly why I repeat stuff. So I wasn't ignoring anything. I wasn't trying to be biased or anything. I'm just pointing out that majority of the time when you create the first low, once again, like I said 20 times in the last video, it's most likely not the last low, and you end up creating more lows until you touch the 200 MA. Again, it has to be a new low below the 50 SMA. Hopefully we understand that now. So all these random dips that's not even below the 50 SMA, like I pointed out in the last video, that's not even creating a lower low, like I pointed out in the last video multiple times, is completely irrelevant. All right, they are not the same as creating a lower low. All right, lower low. Okay, lower low. All right, hopefully we got it. All right, so let me know what you guys think in the comments below. Do you think these SPY puts are simply hedges, right? Those SPY 525 puts, do you think these are simply hedges, or do you think they're actually going to play out? Do you think the 513 puts are going to play out as well? Let me know what you guys think. Do you think institutions are pretty much cooked? Are we just going to head straight towards the upside? I didn't even see these Apple puts, actually, these 205 Apple puts. I did not see these. So yeah, going to be very interesting heading into the rest of this week. Let me know what you guys think in the comments below. Until the next video, traders, have a good one.